What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and on this channel we talk exclusively on how to help the average Joe go from being just, well, average financially to becoming financially independent. In this video, guys, I'm sharing with you exactly how I am adjusting my dividend cash flow portfolio to incorporate an option strategy. Specifically in this video, I'm gonna break down for you exactly how I'm adjusting my portfolio to allow for this new option strategy, which again was discussed in a previous video, which I will link in the description below. I'm going to break down for you exactly how I plan to segment my portfolio into 3 different segments. I'm gonna share with you exactly what targeted yields I plan to have with my options strategy, which will be available in real time in the Patreon community and shared here on YouTube throughout the year. And I'll also share with you some example dividend stocks I plan to utilize in the options strategy. I value you guys so much. I appreciate you being here. I never want to waste your time, and I always want to deliver massive value with every video I make. So without further delay, let's dive in. What you guys are looking at right now is the monthly dividend stock spreadsheet that I make available to every single member of the Patreon community. It's got all the dividend stocks that have been raising their dividend for at least 5 consecutive years, and I've been adding more and more data to this spreadsheet as I get more requests. If you're not a member of the Patreon community, guys, I think you're gonna find a lot of value on it. The Discord channel is launching here this weekend. The Discord channel is going to be available for those who are at the $10 per month tier and up, which includes all of the spreadsheets that I use in all of my videos available for you to download either in Google Sheets or Excel. At the $10 per month tier, you'll also have access to all of my portfolio moves that I make when I make them, especially with respect to the options changes that I'm making. If you'd like more information about that, check out the link in the description below. This is the portfolio as it stands today. It's worth right around $127,000. Actually, there's some cash in there that hasn't been invested specifically because of the changes I'm gonna make here. So it's actually right around $132,000. And right now I've got, how many positions here? 20 different positions in the portfolio. You can see I've got a mix here of dividend champions, dividend challengers, dividend contenders. This is again based on how many years consecutively they've been raising dividends. And you can see I've got a variety of yields as well, as low as 2.58% for Broadcom and as high as 11.84% for QYLD. And within the strategy, you can see that my weighted yield is 5.02%. And scrolling over here to the dividend growth rates, you can see my 1-year dividend growth rate is at 6.3%, 3-year growth rate at 11.6%, and 5-year growth rate at 12.2%. I'm making a fundamental shift in my portfolio. A lot of the holdings are gonna stay the same. I'm breaking up into 3 portfolio segments. First one is my core segment. These are dividend stocks that are quality dividend stocks. Their yields are not super high, maybe in the range of 2.5 to maybe 4.5%. They have healthy dividend growth rates. I like holding them long term. If there's option premium to be had, I might sell covered calls on some of these holdings, but only if it makes sense. I'm not gonna force the premium to happen. Second segment I'm going to be utilizing is my high yield segment. A lot of these holdings are gonna stay the same. When I say high yield segment, you're gonna see companies like Altria Group right here, Altria, Westlake Chemical, Eris Capital, Arbor Realty, Manulife. Here they're yielding above 5%. Again, if it makes sense to sell covered calls, there's a sufficient option premium to be had, I might consider doing so, but that's not the goal of this segment. This goal here is to yield between 5, 6, 7, 8, 9% in the portfolio. It's not even to focus on dividend growth rate. That's more for the core segment of the portfolio. This is about generating a lot of yield. And then the third segment I plan to have in my portfolio is gonna be what I titled the wheel segment. This is the option strategy of the portfolio, where I'm going to be picking up dividend stocks and or ETFs specifically for the purpose of running the wheel strategy, which I explained in the previous video. Again, link in the description below for you to check out after this video. The purpose of this segment here is to not have specific investments long term. It's to sell puts to eventually be assigned, and then to sell covered calls in that holding until it gets called away from me, and then starting the process over again. Now, what's key about this segment is all of the premium that I'd be getting from this segment of the portfolio is going to be reinvested, of course, back into the other segments of the portfolio. All right, so what's the plan for allocating money to the different segments of the portfolio? Okay, so here are the 3 segments here in what I'm titling my new portfolio. This spreadsheet will be available in the Patreon community for those that would like to take a closer look. You can see I've got 3 different segments. I've got my core segment right here, my high yield segment right here, and then the wheel segment right here. These investments right here, these core segments and these high yield segments are not changing investments. I plan on keeping every single one of these dividend stocks. And you'll notice down here at the bottom of the screen, my core segment makes up about $60,000 or about 45% of the portfolio. The high yield segment makes up about $37,000, $38,000 and 28% of the portfolio. And the wheel segment makes up $35,000 and 26% of the portfolio. These are rough targets right now. I think ideally I'd like to make the core segment more like 40%, then 30 and 30 for these two, but for now this is what we're targeting. Now down here in the wheel segment, you'll notice 3 investments: QYLD, RYLD, and SCHD. All 3 of these investments are going to be liquidated. At a profit, by the way. Now, here's the reason why I plan on liquidating these 3 investments. The reason I'm getting rid of QYLD and RYLD is not because I think they're bad investments, because I think they can be a good fit for a portfolio to increase yield in an overall portfolio or specifically to generate cash flow right now. But I'm using this cash to generate even more yield than I would get with QYLD and RYLD. I'm planning to run the wheel strategy, which is gonna, in addition to covered calls, it's gonna give me cash secured put option premium as well as part of the wheel strategy. So if I were to keep QYLD and RYLD and run the wheel strategy, it'd be very repetitive and I don't wanna do that. Now there's nothing wrong with SCHD. I think it's a great fit, a very balanced dividend ETF that's got good dividend growth rates, a healthy yield, and capital appreciation. So it's a great fit for a portfolio. It's just not in line with what I'm trying to accomplish right now. I have some of that in my core segment. I'm okay with getting rid of some of that diversification in favor of the option strategy, which I'm going to explain here in a second. So the capital from these 3 investments, which is going to make up about $30,000, plus I've got, as you can see right down here, I've got about $6,000 in cash in the portfolio. It's going to be right around $35,000, $36,000 at the outset. Now you'll notice right down here for the core and the high yield segments, I've got the weighted yield and the weighted 1 and 3 year dividend growth rates. Based on this assumption here, where I'm taking just the core and the high yield and I'm weighting it based on the 45 and the 28%, the weighted dividend yield for the core segment is 1.84%. For the high yield segment, it's 2.01%. And then their dividend growth rates, you can see 6.3% on the 1 year and 8.71% on the 3 year growth rate. Those are still super healthy dividend growth rates, despite the fact that they only make up 60 to 70% of the portfolio. Now, I'm making quite a claim here. This is the yield that I'm trying to target here. The wheel segment target yield for the overall portfolio would be 13.82%. Now, I want to be very specific here. I have not achieved this yield. This is a target yield based on what I think I can actually achieve. Subject to actual reality, right? We know that, our plans don't always line up with reality. I recognize that. It's just the objective that I'm shooting for, and I'm going to detail that for you right now. So you'll notice a different tab right here, option history. This spreadsheet is what I plan to use to track all of the options that I'm using in the wheel strategy that will be available to you guys real time in the Patreon community as I make adjustments. I just threw in here some example investments based on the cash that I have available, which is right around $35,000, $40,000, just to give you an example of what I can accomplish just with respect to the cash secured put options. In here, we've got 4 different investments. We've got the Russell 2000 ETF, IWM, which I mentioned in the wheel strategy video. Then I've got ONIAC, Citigroup, and Exxon. These are just 3 examples from my actual dividend stock spreadsheet, which I don't have to utilize in order to find good investments, because I want to remind you, as part of the wheel strategy, I'm not necessarily looking for quality dividend stocks because these are not going to be long-term investments if I can help it. I do want to use dividend stocks here, or at least investments that have a dividend yield, because I could get stuck holding it for more time than I'm really wanting to. And if that's the case and I'm not able to sell call options at a bare minimum, I want to be able to have an investment that is generating some yield for the portfolio. So for now, just for the sake of simplicity, I'm using some investments from the dividend stock spreadsheet based on their betas. So I've got the investment, the symbol for that investment, the option type that I'm selling. I've got the strike price, the expiration date, how many days to expiration based on today versus when it actually expires. We've got the premium here that's being collected, the amount of cash required in order to secure that premium. And then down over here, we've got the yield, which the yield is just saying how much premium and how much cash. And then this is the annualized yield, right? So if I could do this every 4 days or every 8 days, this is the yield that I could expect. Now again, this strategy is going to be both cash secured puts, but it's also going to be holding the investment and selling covered calls. And I plan to be selling out of the money puts, just to be a little bit more conservative, meaning that if the investment is at, let's say, $60, I'm not gonna sell a put at 60, I'm gonna sell a put at maybe like 58, which is gonna give me a little bit of breathing room in case I get assigned so that it's not gonna be assigned way below the strike price, which could then lead to trouble being able to sell covered calls with enough premium. But when I do get assigned, the plan is to sell at the money call options, which is going to generate even more yield because I'm okay with these investments being called away from me. I'm okay with any capital growth that I miss out on. This is about generating as much cash flow as possible, which I can then redirect into the rest of the portfolio. So I plan to actually get yields that are higher than 30 to 40% annualized. Like I mentioned, these are actual numbers that I pulled off of the option chain, and this option data is based off of the ending market prices, bid and asks on November 24th. So I'm not just, taking numbers out of thin air. These are real numbers. Yes, it's gonna take me about $40,000 to secure these options. This is $250 that I'm collecting in just 8 days. And in this case, actually for the Russell 2000, it's 4 days. So this is $336, assuming that I could actually collect $86 twice in this period, right? It's quite an assumption, but I'm just saying, just think of the example. This is $336 that I'm generating, right, off of $40,000, but I'm doing it every 8 days. So I could keep selling, and that is $336 that I can reinvest back into the portfolio every 8 days. So this 9.98% yielder, this is just an assumption based on this limited data that I showed you here. It's taking an average of these 4 yields right here, and it's saying this times the weighting in the portfolio, which is 26%, which leads to 9.98% for a total portfolio yield of 13.82%. I actually hope to do better than this, but I'm trying to be realistic, and I know that some of my trades are gonna go sideways, right? Some of my options are gonna be assigned way below the price that I wanted to be assigned at, which could make it difficult to get option premium as high as I want to in the covered call segment. Again, my goal with this portfolio, guys, is to be fully transparent with you, show you along the way the mistakes that I make and the ways that I'm being successful in generating significant amount of cash flow. After a month or two of doing this, I might adjust how I invest the wheel segment. I might adjust, I probably will adjust the investments in the core segment and the high yield based on how those investments are performing. And again, if you'd like to follow along with how these trades are going in the Patreon community, make sure to check out the link in the description below, and make sure to leave your 2 cents in the comments below for this video. I'm always open to your feedback. I want to know, what you feel about this video, what other content you'd like to see as well. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.